Welcome to the daily update, where I'll go over the action in the market for Wednesday, September 27th, and then we'll see how things look for Thursday, September 28th. We had a little bit of an up day, just barely. It was almost unchanged, but it goes in the books as an up day. It's helped a few of our short-term indicators to go off our extreme list, but the list is still pretty long. Intermediate term, the list is still pretty long. We're in a downtrend now, and it's a confirmed downtrend. We've had the ADX for the short term, and now the intermediate term confirmed that this is a downtrend. But right now, you could also say that support is holding, and I'll talk about that as I go through the video. So right at the open, we had a higher open right at the daily pivot at 42.84. Then prices drifted lower below the unchanged level. There was just not a lot of conviction right now. If there is any conviction, we see it to the downside, and that's kind of exhausted itself, at least in Wednesday's session. We'll have to see if that follows through. We have some big economic reports coming out that could be a real catalyst to go either up or down. Then, as the day went on, prices declined below S1 at 42.55. We found support at S2. We just barely got to that level at 42.37, and then we rebounded back up to the daily pivot. Prices then closed below the daily pivot, saw a little bit of selling going into the close, and barely above the unchanged level. It was virtually unchanged at up 2% for the day, and volume was above average. Now we're seeing some action starting to come into the market. The technicals, we are negative in the short and intermediate term. We're still positive in the long term. We're oversold still in the short term. We're kind of oversold in the intermediate term. Long term, we're still hanging in there. And it's about inflation and interest rates. What's the Fed going to say? What's happening with the dollar? What's happening with oil? What's happening with interest rates? These are pretty heavy pressures that are coming on to stocks right now and having a real difficult time with any kind of a bounce. And we're also in a weak seasonal time. The comments: rising oil prices as well as interest rates, they're pressuring stocks, but it didn't stop the mega caps from rebounding later in the day. Early, everything was pretty much weak, but then we saw some buying coming in later in the day. That could be positive. Small caps also rebounded slightly. They've got a long way to go to repair some damage, but they were up. Micro caps, the index that we follow, it's still breaking below 100. And again, you might think, well, what does that have to do with the S&P 500? Well, first of all, pretty much all stocks in the S&P 500 started out as micro caps and then small caps, mid caps, and grew into large caps. And of course, you have the inverse of that happening sometimes when companies go out of business. But with the small caps and the micro caps, they have to borrow a lot of money. And with interest rates going up, that puts a real pressure on their earnings. And in a good, solid environment, we like to see both the micro caps and the small caps doing well. Here's our short-term list. We still have the CMB Composite, the 20-period exponential moving average, the Stochk RSI, Williams percent R, CCI 14 and 20 stochastics, standard deviation chart, and RSI based on 9 periods. They are extreme negative, and taken together, you could suggest that they're oversold. Intermediate term, we still have the 50-period exponential moving average. So we have the 20 in the short term and the 50 in the intermediate term. The S&P 500 McClellan oscillator, the PMO studies, we're wondering about the chicken money flow. That's why I have a question mark here. And then the 19-day exponential moving average of the advanced decline ratio based on volume. The current scenario that we've been working with for over a month now is that the economy is stronger than expected. And the market was like, okay, that just means rates higher for longer. Well, now you've got Fed officials who've been coming out saying we might have to raise interest rates. And now that's throwing some more negativity into the mix, or fear, as far as stock market investors are concerned. We're also watching China's weaker economy because so many companies do business with China. And then oil continues to go up, and this is producing inflation concerns. The scenario that I was watching for, and you could kind of still keep this on the list because we really haven't decided one way or another, that we could decline to that long-term trend line, and we're still with our intermediate term indicators a solid down day, and they could get extreme negative. But then what's going to happen with support? Right now it's holding, and doesn't mean that we have to stop right at a support level. We can always drop a little bit below that. But in light of something like that happening, we're negative and we're doing some technical damage to the charts right now. And again, I'll show you how that works. And then we're also in that weak seasonal time, which is putting pressure on stocks, which is kind of turning out to be a self-fulfilling prophecy. The dollar was up and interest rates were up. Another day where that's happening, but stocks were able to see some interest later in the day. The 30 to the 5 has still gone back to being normal. With the other yield curves that we follow, they are still inverted. Sentiment, we're getting extreme now. This is another sign of potential capitulation. We're not seeing a real pickup in volume, although we did have above average volume. But the freak out where people are like, okay, this market's never going to go up. I was buying on the pullbacks and it just kept going lower. And instead of being in an advantageous position right now, I've been buying and it's been going down. And now I'm seeing some losses. I'm getting tired of this and I just want to get out. Not necessarily a longer term capitulation, but at least for this move that we've been going through. So now sentiment is starting to get more negative at 25, where it had been at 27. In our trend, we're both, as I said, confirmed with a downtrend in the short and intermediate term. The economic reports that came out, we had the weekly MBA mortgage applications index that was down 1.3% when you take it all together, with purchase applications being down 1% and refinance applications being down 2%. Durable goods, this was kind of the big economic report of the day. It came in up 0.2% month over month, and that was greater than expected. This could have pressured stocks more than it did. They expected it to be down 0.2%. Last time it was up 5.6%. If you take out transportation, we were up 0.4%, greater than the 0.3% that had been expected. Last time it was up 0.1%. Here is a chart of the mortgage application showing how we declined this past week. Here are durable goods orders. They're still above zero and they ticked up just slightly here. So we're not falling off a cliff necessarily with this when we look at it year over year. Non-defense capital orders, that's when you take out aircraft. We're above zero, but we are seeing a decline here. And then the month over month reading, where it had declined last time, it was actually up this time. Again, more than what the market had expected. So that's kind of the good news is bad news scenario. And then we're keeping an eye on this as well. And I've added the 4.02% onto this graphic here because it's really hard to see. It's right up here near the top. But we're at 4.63%. We just keep going up and up and up with the 10-year yield. We're well above the 4.02%, which, according to RenMac, when we get into that area, this is pressuring earnings on stocks, which ultimately puts pressure on prices. Here's the intraday chart where we gapped higher up to the daily pivot, and then we just went sideways. You're not seeing a lot of gyrations right after the open. And then we drifted down below the unchanged level. We drifted down to S1, tried to find some support there, almost made it down to S2. And then this is rather encouraging. Later in the day, we saw a bounce where we got back above the unchanged level, a little bit above the daily pivot, and then some selling going into the close. So we were virtually unchanged on the day. And we saw the same basic pattern when you look at growth versus value intraday, where they both saw a bit of a rebound, but they've both been under pressure lately. But we're seeing this again. This is the third day in a row where we're seeing some buying going into growth stocks. When we look at the S&P growth to value ratio intraday, it closed above the unchanged level, and this could be some smart money coming in and buying growth on weakness. Looking at the end of day value, we're also seeing this continuing to go back up. Now, we've been pretty much sideways since the early part of March. We're still in an uptrend, but the fact that this is going up could be a sign of strength under the surface. We're keeping an eye on the VIX, which continues to go up, at least on an average basis, and we're wondering if that's going to happen with stocks. With the line chart of the VIX, we declined slightly and we came down slightly with the bar chart. We saw volatility tick back down. It was a pretty boring day, even though it was above average. The fear gauge that we look at here is still continuing to go up, and the other fear gauge is also continuing to increase. We're also going back up now with the VIX to VVIX ratio. That hasn't rolled over yet, and this is more negative for stocks. And then our equity put call ratio based on 5 periods, it's pretty much flattening out now, but we're above this, excuse me there, having to clear that throat. We're above this extreme reading now, and we're waiting to see at some point, is this going to top out and start to roll over? Hasn't done that yet. The longer term equity put call ratio is also continuing to go up. That's negative. The Ulcer index is also continuing to go up. We're right about down to the moving average now with the advanced decline line based on price. We're still showing weakness based on volume. This is also more concerning in that we're seeing a real expansion of new lows. Even though we had the slight update, even though we saw some late day strength, in the early part of the day when the market was heading lower and we're dropping below support on an intraday basis, that's really causing some of the new lows to really expand. So we're declining with the 5 period and the 10 period. We're not extreme negative yet with our advanced decline ratio, but we are negative. Accumulation distribution ticked back up slightly, but we're still below a declining moving average. And we're wondering, are we getting to an extreme negative reading with the Chaikin money flow? Back when we saw this in October, that was when we set the low for the S&P, we were seeing similar kinds of readings. In March, when we also set a low, we weren't as extreme as we are now. So you're wondering, are we getting to an extreme reading here? We ticked up just a little bit with the cumulative NYSE advanced decline line, but it's still negative. We turned back up slightly with the NYSE advanced decline line. We're pretty much about at the same point below an upward sloping trend line with the other NYSE advanced decline line. We're still showing overall weakness when we look at our risk on risk off ratio. It was up slightly, but it's going to need to show more than it did on Wednesday. Here is the trend where we're going above 20 now with the ADX. We're above the moving average. The red line's on top. One thing that's kind of interesting is you see how the red line is really climbing. It could get above that 40 level, which sometimes signals an extreme reading, and that might produce some kind of an oversold condition. We're seeing a similar thing here with the short-term ADX. The downtrend is confirmed. The red line is getting kind of close to that 40 level. We're coming back up about to this trend line where we had dropped below that, and then we saw some strength later in the day. So the market's not ready to give up this level of support, at least yet. It's holding for right now. You can see on the bottom where we did tick up slightly above average with volume. And then we have our list of short-term indicators. The Stochh RSI is extreme negative. The Williams percent are, the CCI 14 and 20. And we're below the short-term rainbow chart. We're also looking extreme in the short-term stochastic chart. Also with the intermediate term, even though it ticked back up, we're still declining in the long short term. The go-no-go system is still deep purple. That is negative. The TTM squeeze continues to decline, and we're wondering, are we getting down here to a potential extreme negative reading? We're not quite there yet, but we want to watch this. We came down just a little bit with the balance of power, but we're still negative. We're below the midpoint. The CMB composite continues to be extreme negative. We use this like an oscillator, and we're still extreme negative with the 20, even though it ticked up. We ticked up a little bit with the 50, but we're still extreme. We are declining with the 200-day exponential moving average. We're also continuing to decline with the BPIs. The early weakness is producing more sell signals with the bullish percent index of those stocks in the S&P 500, and we're not getting an extreme reading, at least yet. The McClellan oscillator for the S&P ticked up a little bit, but it's still extreme negative. The summation index based on price is declining and based on volume, and we're not getting to an extreme reading, at least yet. The NYSE summation index based on price is declining as well as volume. We're still negative with the Elder Impulse system for the S&P 500. The mass index is going sideways. We are also going sideways now with our 200 period simple moving average study of the S&P 500. We ticked up just a little bit with the 50 period, and we're wondering, are we going to come back in and match this previous low before we start to see a bounce? The PMO This is all of our momentum oscillators. Our momentum is clearly negative, and we're also declining based on price and volume. We're extreme negative with the PMOs that are rising, even though we ticked up. We're extreme negative with the buy signals. We're declining with the PMOs that are above zero. We're also declining with the Swenlin trading oscillator based on price and volume, and a little bit more downside, and we could get an extreme negative reading based on volume. The NYSE bullish percent index below 50 and declining. The NASDAQ 100 bullish percent index below 50 and declining. The slope indicator is negative, and we're wondering if we're getting to an extreme negative reading in the short term. The MACD also continues to decline. We're wondering, are we going to come down and hit this previous low that we hit before we start to turn up? Or, as you can see back here, we can still fall a lot further with the MACD. All of our oscillators continue to be lower, and we're still battling around the 200-day exponential moving average. We're wondering, are we going to come down to the simple moving average? We haven't hit that level yet, but so far the exponential moving average on 200 periods for the S&P is holding. We're still in the -3 range for the standard deviations chart, and the parabolic SAR is still negative. We're still below the intermediate term rainbow. The Erin indicator continues to decline as the red line is pegged at the top and the green line is declining. That's negative. We're almost negative with the 14-period RSI, but it's negative for right now, where we're extreme negative with the 9-period. And we broke down below this 100% retracement level on our short-term fib chart. We're also below the 61.8% retracement level on our longer-term fib chart. And we're still above these longer-term fib levels, but we want to watch this chart just in case we do continue to fall. We're breaking below 100 with the microcap index, and the trend is negative. We're also right about at or just a little bit under the longer-term trend line that we've been watching. Over the weekend, David Keller suggested that we have a confirmed head and shoulders top here, which could be negative for the market. If you interpret it this way, then you might agree with him. If you think that this is a little too liberal for how the head and shoulders top is drawn, you may not agree with him, or you may not be one that really follows patterns all that closely. We are declining based on trend with the Heiken Ashi. The Kegi is negative, the Renko is negative, and the 3-line break is negative. We had a new zero drawn on Wednesday when we had the weaker open, and we're still working off of a double bottom breakdown, which sounds like a dance. We're still below the 200-day moving average with the Dow. Even though it was down again on Wednesday, it was well up off of its low. We're still negative for the diamonds, and we did drop down below this NASDAQ 100 previous low, but we're closing right about at that low, maybe a little bit above it. So far for right now, we can say support is holding. We've switched back to neutral for the QQQs, and we're also watching the 61.8% retracement level. We broke below this previous low. We're wondering, if we see more weakness, are we going to hold at the 61.8% level? We're also seeing the NASDAQ show a little bit more weakness, where it broke through the previous low and continues to decline, even though it closed up off of its low. And we're below the 50% retracement level. We're now underneath it. We've been chopping a little bit above, a little bit below over the last few days. We're keeping an eye on the FANG index, where it's coming down to this previous low. It hasn't broken below that yet. So on an intraday basis, this is still holding, and we closed up off of that. The small caps were up, but we came down to this pivot level. We're still below the 50 and 200-day moving averages, so this is still negative. And we're wondering here, is this a head and shoulders top? If you implement patterns where we have the left shoulder, the head, and then the right shoulder, we're below the 200-day moving average. The RSI is turning back up after being extreme negative, but we're still declining with the MACD. We switched back to neutral for the Elder's Impulse system with the small caps. The mid caps came down to this pivot level, and so far this support is holding, but we're below the 200-day moving average. And the mid caps for the Elder Impulse system went from negative back to neutral. The Dow's kind of flattening out right here. We flattened out a little bit with the transports. What I wanted to show on this chart is we're seeing continued weakness with the utilities. The dollar continues to go up and is well into the 106 range. And interest rates continue to go up. Here's the 10-year yield just going up and up and up, supposedly to the moon. So when the rate goes up, that means the price of the ETF goes down. We're getting to an extreme negative reading with the RSI. We're declining with the MACD. The 30 to the 5 years still above the zero line. So it's gone back to being normal, but we've seen this before, only to have it come back and go inverted again. And we're still slightly above this midpoint for the trend channel going back to 2009. It's really not so much that this is support. You could maybe make a case for that. It's if we're above it, that's positive. If we're below it, that's negative. And here's the 19-day exponential moving average of the advanced decline ratio. We're getting almost extreme based on price. We remain extreme based on volume. And then I brought this up, this arithmetic scale chart where we're coming back down. We broke below it intraday, but so far we've been able to close on this trend line. Here's Tom Bowley's research, also suggesting that we see weakness going into the latter part of September, which is what we have been seeing. So what's our outlook for Thursday? Still just a few earnings reports that are coming out. The UAW strike is still continuing. There's now more and more talk coming up about the government shutdown. Some people want it to be shut down, other people don't. It's just a political game that needs to be played after we dealt with the debt ceiling crisis last spring. Student loan repayments will be starting again in October, which could put a drain on the economy. Our technicals are negative, and both in the short and intermediate term, the downtrend has now been confirmed. We will get the weekly MBA mortgage applications index. Okay, and I screwed that up. I'm going to have to go look at the next chart here. We're keeping an eye on the geopolitical events. And right now it's about inflation and interest rates, and then anything that the Fed might say. All right, here we go. This is Thursday. We're going to get weekly jobless claims, the third estimate for GDP, and then pending home sales. The big one's going to be PCE prices on Friday. Consumer sentiment can also be rather influential, as well as the Chicago PMI. The Stock Traders Almanac statistics for September 28 were neutral to positive with the Dow and S&P. We're just flat out negative with the NASDAQ. And we will be on the 19th trading day of the month, where we're following the dashed green line here, where sometimes we tend to see some weakness now during pre-election years. Here's the Carson chart, also suggesting that their research suggests that we still might see another bit of a bounce before we see some weakness. And we're in that part of the yellow period here where we get pretty choppy now until we get further into the end of the year, where often we see a rally during a pre-election year. Here's the NASDAQ, also showing some more weakness going into the end of the month. The S&P, weakness into the end of the month. We're only up 33.33% of the time for the S&P in the month of September when we look at pre-election years. So our scenarios, you could go more with the down one now because we have a confirmed downtrend. Our technicals are negative, and that trend has now been confirmed. We can't go with the up one. Our charts are just not suggesting that. And we're no longer going with the sideways trend because both the ADX charts that we look at are above 20. So we still are below long-term trend lines, which could offer longer-term overhead resistance. We're in a seasonally and historically weak time. The equity put call ratio, as well as our longer equity put call ratio, they're continuing to go up. The risk on posture, it ticked up a bit on Wednesday, but it's still declining. And then the S&P 500 oscillators are negative, as well as the NASDAQ 100 oscillator that we've been watching. The cumulative new highs, new lows for the NASDAQ are still declining. The 3-month yield is still above where it was in 2007. The S&P is underperforming utilities. Now, this is seeing a bit of a bounce right now. I didn't show the chart because it's not really changing all that much currently. If it still changes and we see more follow through, then we might add this over to the positive side. The Staples to S&P 500 ratio is now back to advancing. The Russell's below its 200-day moving average, and we're wondering, has it completed a head and shoulders top? The parabolic SAR chart is negative, and the vortex is also negative. And then earnings season, the positive sign. We have seasonality and setups that may come back into play after we get done with this downtrend that we're in, and possibly a little bit closer to the end of the year. The daily special K chart is still positive. We're still above the downtrend channel upper line. The Russell, the small cap, the mid caps, as well as the financial index, as well as mid cap growth, as well as small cap growth and value. All of these are still positive, and we're chopping sideways, but seeing some more shorter term weakness. Here's the financial sector, which also under some pressure lately, but still working off of a golden cross. So our conclusion, we're negative. The short and intermediate term downtrends have now been confirmed, but we're getting oversold, and we've been oversold now in the short term. We're becoming more oversold in the intermediate term, where we're still positive in the long term. Thank you. I really hope you found this helpful. I hope you have a great day, and I will talk to you in the next video.